Yo, yo. How's it going? How was that dip? Big old dip. Won't be a sec. I'm just setting up other things. See if I can get it back to the way I used to have it. I think I might sit in my Discord and we'll just test that out. Discord. Okay. YouTube voice. Here we are. Just change it to voice activity. How's that? That's better. Alright, that's better. Now I've just got to turn on the mode that lets me... I think it's called like dark mode or something. Gotta find it. Appearance. There should be a way for me to get this so it shows speaking users only. Yeah, that's better. And then the background here, this white background, I've got to fix that up. Background color. Testing, testing, testing. Oh yeah, that's cool. 80. On, off. No, my name just stays up there while I'm speaking. That's annoying. There we go. I fixed it. Dark Reader is what it's called. Okay, now that we've got that sorted out, I can get back to it. I might have to restart my Discord though, Let's see. Discord here. Check for updates, perhaps. Because up here, it's keeping my name visible, but it doesn't want to hide it after the fact. Thank you, Eurozaza. Will Smith that like button for Rick. Thanks, bro. Appreciate it. All right, I'm just gonna leave that there the way it is. That's fine. And I'll put a link up to the Discord chat as well in case anyone wants to join in. Copy this. We're about 15 minutes away from a new daily candle. So the end of this day's candle, which Bitcoin's up 7.7%, which is not bad. Okay. Join me on Discord. Here we go. That's the link. I'll pin that up the top. That should allow people to jump in if they so choose. Hello, Rami. How you doing? Drops in, drops out. Let me tweak around a little bit more with this Streamlabs thing. This Steam kit overlay thingamajig. See if I can fix it. Voice widget. Hopefully this works. Let's try this one. Background color for voices. Let's see, I'll make it like a light gray perhaps. That might be a bit better. Hello, testing, testing. Wait, that's the shadow. Let's get the background a dark gray. %, opacity. There we go. Okay. Sorry, this is probably pretty annoying to listen to. Alright, this might work. And if it doesn't, I'm just going to leave it. And we'll just get on with it. Pop this back up here. So let's have a look. We've got that $20,000 psychological level broken. So we've broken below that all-time high from 2017, as we all know. Let's zoom in a bit. This area, we didn't even quite hit 20K, at least on Binance back in 2017. It went up to $19,798.68, so not quite there, but it's still, we still count it as the 20K all-time high. Let's go back to the daily chart and see what kind of supports we're working with. So we currently bounced here at 17,622. Let's try and find why. There's got to be something in the past that produced that kind of support, and you can see here it's the bottom of this. This is back in 2020, the end of 2020, just before the huge bull run or during the start of it. So right here, you can see price broke up, hit the 20K all-time high, got rejected and fell back. And this was a number of days. It was like a number of days after attempting the all-time high that got rejected. It came back and found support right here. So this is like a historical level of previous support that is being found again. Now, if we lose that support in the current time, there is another level here as well, which is 16,250 roughly. We'll just call it 16K just to round it off. But yeah, after that, let's see what other kind of supports we're dealing with. So why was that $17,600 a level? Almost got a swing high to that level on this dead cat bounce after the old all-time high. We got a downshift, and then it got rejected at a level. It's not quite on that mark, but it's in the vicinity enough to where it's supplied these levels back here. So if we lose that, there's a $14,000 support right there. That's another swing high of 2019 bull market. So yeah, these are just the historical levels to look at that may produce, you know, levels of price action going forward. So what have we got? 8 minutes until the daily candle closes. So we're on the daily chart right now. I'm going to zoom into the present day. And we've got, it almost looks like a tweezer bottom. You could argue that that's like a tweezer bottom right there. So we may get a bit of a relief rally that goes up. I don't think it's the end of the bear market, but it could be enough to see us like recover a bit, you know, as people start accumulating. There might be enough confidence pushed back into the market to, you know, to start leveling this out and getting it to go flat. I mean, you can see that we've done it at every $10,000 interval since 40K. So you can see, you know, we drop to 40 and then we spend time around that $10,000 range, or that big even number, 40K, and then we lose it. Fair enough, we lose it. And then we spend time at 30, and then we eventually lose that. And then what I think might happen is we'll spend time at 20 deciding where to go. Like, so it just buys time for the market to figure out what the next move's going to be. So I think there's probably going to be a bit of a ranging perhaps that goes through here. Could be wrong, but that's my sort of opinion on it. So if I do that thing where I copy out the bars, I think it's the bars pattern. Yeah, let's use this as an example. So if we take it from like here to here, that looks something like that, where it could, it could kick around 20K for some time, just like it did with 30. So let me read some of these comments here. Let's get rickety wrecked. Is this a fake out bullish engulfing to get a few more to jump in before the drop? It could be. Like, I honestly think, yes, it could be. Just like what happened here. Like, we got this pump here and we thought, oh, yep, we're sweet, we're heading back up. And then they just get crushed on. And then, boom, huge drop. Same with this one here. You had this final push up and then it was like, oh, yep, bull market's back on, or, people getting confident again. Because we had, what did we have? We had a higher high and a higher low. So that indicates, oh, yep, we're starting to uptrend here. And then, people would have bought this drop here because it's like, oh, yep, it's part of the trend of higher lows and higher highs, except this is where, if I zoom in on it, this is where the party got stopped, right here. Get my pen tool back. So just there is where it was like, no, that's not happening. And then huge rejection. And then that severe sell-off. So just got to be careful. Don't let these green days fool you, because it can certainly get shoved straight back down again, within an hour. So just be careful. Don't think that it's like that this means that the market's bouncing like back into a bull market. It's just a bit of a relief rally, if you ask me. Just a bit of a bounce off support. And the thing that causes that mostly is people buying, like people accumulating, right? So the big whales, as price falls, they want to buy whatever gets thrown up on the order book, because they want to fill their bags. They're getting prepared for the next bull cycle, the next bull wave going up. So yeah, anytime you see a bit of green action, that's just a lot of buying. And then obviously retail will jump on that because they'll think, oh, yep, it's a green light, I'm going to buy too with that. And then it just sort of like snowballs. And then, once the whales have, bought at that level and they're satisfied, that's when, there's no more support going up. There's no more sustain for that amount of buying. So retail can't sustain buying through the walls that are above, that are up higher. So they just wait. They can't really perform any actions that are going to decide the direction of the price. So what happens is, it just goes into a free fall, like as there's no real support from. If the whales want it to fall, they'll take away their support. They were probably supporting it through here to accumulate at this level, and then effectively when these supports get broken, that changes market sentiment. So people become fearful, like people get a bit scared that things are dropping out, and they panic sell, and that contributes to this this decline in price, this sell-off. So now I've been just dollar cost averaging. I did some buys up here. I wish I hadn't, but that's just, you don't know what's coming. So that's the point of DCA. You just admit, you just acknowledge that, yep, I don't know what's going to happen next. So you're just making buys every now and there, and then if things drop down, okay, well I've got to come up with other funds to average this down and buy through here as well, and then hopefully that gives you a split, like your overall holding will split between these two purchases, these buy zones. So we are well and truly through those buy zones that I had drawn up before. Let me see if I can bring them back. I think it was these. Yeah, we've well and truly broke down through buy zone 3. So this is, but that's okay. Like you're holding. At least you bought. If you did buy through these areas, these zones, at least you bought on a low and not up here in a high, in a market high. Buy when the asset is low, not when it's high, and then you'll be sweet. But yeah, these buys are for accumulation purposes. It's not for like leverage trading or futures trading or anything like that. These are just for a long-term hold type buy, just as an example. All right, let me hide those again, because we've sort of gone past that now. Okay, so we've got a new day. We're 25 seconds into the new day, and let's see what we can do with it. Are we going to maintain action above 20, or are we going to drop 20,000? Like are we gonna lose that $20,000 level again? So let's have a look at some other coins as well. I know that Doge has actually been performing rather well in this drop. It didn't lose 5 cents ever, I don't think. Yeah, it maintained above 5 cents. Yeah, there was a tiny little bit of a wick that went below 5. Like in 2 instances, just very momentarily it dipped below 5 cents, but for the most part, support at 5 cents seems to be the name of the game at the moment. And yeah, the move between 5 cents and 6 cents is a big move. Like that's, what's that in percentage terms? That's 20%. There you go. 20% move up. So where it goes from here, I think will still be dictated by Bitcoin. If Bitcoin can start building some kind of a trend to go up, to recover, I don't think it's going to happen. But if it does, that's when more liquidity will be put into crypto as a whole, which will therefore give Doge the opportunity to start, rising as well, and every other alt as well, every other altcoin. Solana has done well as well. In this sell-off, I think Solana went down to $28, something like that. Let's have a look. Oh, even lower, 26. So if you believe in Solana long term, these buying down in these areas would have been amazing, because it's already recovered up almost, yeah, basically 25% from those lows, which is a good performance out of Solana. It's got a long ways up too. So if you think that Solana's ever going to come back up to its previous all-time high, you're looking at, what kind of a gain are you looking at? Something like 730% from here. Recovery to all-time high, but that might take a while. And let's see, what other good coins are there? So the XRP chart kind of looks similar to Solana. Let's see. Yeah. And I think that's just the alts passively performing the way they've just passively been performing with Bitcoin falling down. Like, it's probably a similar story for a lot of them. Tron has been interesting. That's had some crazy runs. This year even, this year 2022, there's been some pretty decent ticks up on Tron. So if you think Tron can do it, look at these 30-40% runs that go up. It's a very strange crypto Tron, like the way the chart, the way it behaves. It's like it kind of pumps and dumps quite regularly. Like it just gets picked up like crazy. So that's TRX. So yeah, you're right. So Saleh, it performs independently of the other altcoins. It does its own thing, it seems. I want to go back to, let's have a look. Let's check out a bit more of a historical chart for Bitcoin. Bitstamp, this is the one. Let me just throw up a line for 20K. Lock that in. I'm going to go weekly, and we'll turn the logarithmic view on. Now, something that a lot of people in the technical and the crypto technical analysis community, or Bitcoin especially, what they've been talking about is this 200-week moving average, and the trend that's been set in for Bitcoin is that it doesn't spend much time below the 200-week moving average. So you can see there's an instance here where it dipped below. It used it as support through here. It dipped through it during the COVID crash, but it didn't spend much time below that. I think it was 2 weeks. And now we've had a weekly candle close below the 200 weekly moving average, and that's a simple moving average. It's not an exponential. But I think it's only reasonable to see price eventually fall and like break this trend of it holding the 200 weekly, because prices come up so high, there's a lot more room to fall. When you've set in a number like $69,000, it's got a long ways. It's been performing so strong that weekly average has been pulled up so high, so it's only natural for it to eventually break down below it. And that's what averages do. I mean, price will swing up way ahead of it, and then as they correct, it'll punch down through that average. But Bitcoin is such a strong performing asset over time, as can be seen evident in this chart. Like, this is pretty much the lifetime of Bitcoin on being traded, at least, because I know it existed before 2011, but this is it on Bitstamp. You can see it performs very strong after each bear market, each sell-off. It recovers quite strong. And I was watching a video yesterday about how the global economy has been influencing the market, the crypto market. So I'm going to link that in the chat as well. Let me do that. I'll find it for you. It's very interesting. He explains the economics behind it. Let me just find it here. Here we go. So I'll link that in the chat. I'll show you what the video looks like, actually.
Bitcoin breaks
So it's this guy here, Greg Dickerson.
Are you looking to get into?
So his analysis on crypto is pretty, it seems pretty sophisticated if you ask me. So check out that video and see what you reckon. Now, another interesting thing, not only with the 200 weekly moving average, but also the RSI. You can see on the weekly, dips down into, below 30 on the RSI are very uncommon, and when they do dip below that level on the RSI, it indicates really good buying opportunities. Like if you had bought here, check it out. Look at the recovery on that. That's the dip, the weekly dip on the RSI below 30. On the weekly RSI, and then also here, really good buying opportunity. And then now we're getting it again. We've dipped below 30 on the RSI on the weekly. So could this be another really good buying opportunity? I think yes. Like, why not? Just be aware that if that trend breaks, you want to have a plan to take advantage of further discounts on the. So this is why DCA is so helpful and useful. Is you're just buying as time goes on, and you're getting a better average, getting more for your money, more crypto for your money, basically. But just remember, only put in what you can afford to, lock away for some time, because the growth doesn't happen in a single week. It takes time. It takes sometimes multiple years for it to see the full potential of the returns. So remember that. So I guess the main thing is, as long as you weren't buying during the highs, you can see the RSI. Look how elevated the RSI can get when things are really hot. All through here, this is basically telling you, do not buy. Do not buy when I'm up this high, the RSI. See? As soon as the RSI surpasses 70, you should think, okay, this is heading into the seller's market. Like this, people are the whales are selling, they're distributing their holdings. They buy it when the market goes weak, and then they sell it when the market recovers and goes high. So that's the whole point of an RSI. It's to show you the relative strength of the market compared to where it has been in the past. So it works off like an average. It's kind of like a moving average, this line, this RSI. So the relative strength of the market at this moment in time compared to where it had been before on these highs is low. So it's just indicating that market is very weak at this point in time, which is what we're getting here. The market's very weak, and we all know that. We've seen it unfolding before us, before our eyes, over the last few months. But yeah, you can see what happens during these weak moments. It doesn't spend a lot of time on the weaker side. It tends to, if we were to draw a line through the middle of the RSI at 50, the 50 level, let's go full screen, maximize. You can see that the price has spent more time above 50 than it has below. So these conditions for accumulating, you've got to really jump on them if you want to take advantage of the low prices. So price tends to, at least from a historical perspective, Bitcoin likes to spend more of its life up in the high side of the RSI rather than in the weak side, because it's such a strong moving asset. Crypto as a whole is. So anyway, let's delete these squiggles. But yeah, it's just a part of the cycle of Bitcoin. We seem to get these. If I was to smooth this out, it's been doing this, you know. So where does this take us? Like, we might not get an all-time high again until next year, late next year, or even into the early 2024. So it might take a couple of years before we see all-time highs again. And it also depends on the global economy. Like, at the moment, in that video that I linked you, he'll explain what the economy's doing and what the Fed in the US and, you know, globally, like what economies have been doing as part of keeping the economy moving post 2008, which was the global financial crisis, that massive drop. So the market, if you look at the S&P 500, the Dow Jones, the Nasdaq, they've all been like really. Let's just look at the Dow Jones first. This was the 2008 GFC, just this huge crash here. Ever since then, markets have just been propped up, like, and there's been this huge appreciation of value in the markets. So not only the Dow Jones, but the S&P, the SPY, same thing. They look all very similar. You get this 2008 drop and then a huge bull run off that. So we haven't, the S&P 500, which is the top 500 companies on the stock market in the US, they haven't been down toward this 200 weekly moving average since the COVID outbreak, which was down here. It's quite a sharp penetration through the average there. But the recovery was pretty explosive off that. So will we get another moment like that again where it springs off, or it springs out? See, the S&P hasn't even come into contact with the 200 weekly moving average yet, so there could be some more selling to come in the stock market, but we'll see how it goes. I'm not an expert by any means, or with you know, global the economic sort of nature of the economy. I'm just trying to think of how to put it into words, but yeah, I'm not, by no means am I a financial expert or anything like that. I'm sort of relaying information that I've picked up from you know, seeing people's opinions on what the economy's doing. And it's hard to predict, because we're just sort of going by what they plan, you know, like what the people that control the economy have planned, or how they're going to deal or handle with the environment, or the economic climate. So there's this thing called quantitative easing that the Federal Reserve do to try and keep the economy moving. I've got a very what would you call it, primitive understanding, something like that. It's a very unsophisticated understanding of what that even means, but it's basically they're printing money like crazy, causing inflation, and, you know, devaluing the dollar. And I don't know, that method of keeping things going, keeping things moving is sort of like a band-aid solution, where they bail out the big end in the economy, like the big end in town, like how the banks got bailed out in 2008. it's just a band-aid solution for a system that's inherently flawed. Like, it's not a perfect system. The global economy, it's like it's sort of, it falls over and then it gets propped up and then it falls over and then it's like the natural, I guess the mathematics of it, the natural course of action for the market is to fall down, like, and things correct back to where they should be. And the reason it grows and gets propped up is because of like credit and printing money and just like loans and things like that, just on a macro scale. And then, but there's a time, like if you look up why 2008 happened, with the housing market in the US, like that'll explain in more detail of like how, like what's been causing these huge crashes every decade or so. Sort of like everything gets rebalanced, I guess you could say. The economy gets rebalanced. So we've got this was this drop here. I think that was the bubble, the tech bubble bursting, the .com crash. After the .com boom, there was like a lot of there was a correction off that huge boom through the 90s, and that hit a low, and there was a recovery off that. It was basically a double top, similar to what Bitcoin's done recently. If you look here, the double top here, double top, and then correction off that double top. So correction, finding support. We were trying to establish support at 30, but we've lost it. It's actually gone down to the next tier. But yeah, I guess there was support at around 83, $80 basically on the S&P, or 80 points. So, and then that got lost as it broke lower, and then there was a huge recovery off that. So are we going to get that huge recovery and growth, just like the S&P 500 did? And then, it set it up for like this massive growth for a couple of decades, basically. Almost 2 decades of growth, long term. But if you look at the entire lifespan of, let's see, markets, so I think the Dow Jones is the best one to look at, the DJI. Over time, all through the 1900s, and I mean, the Dow Jones history on this chart goes back to the late 1800s. But you can see it's made up of lots of crashes, but the growth and recovery is always stronger. Like, it always comes back stronger, and naturally, as society moves forward with technology and economies grow and population grows, the markets reflect that growth. So things move up, inflation rises, all that stuff. I think these are, those are the world wars that I had outlined, which actually, funnily enough, yes, it caused volatility in the market, but it actually stimulated a lot of economic activity. So a lot of growth, a lot of industry was born out of the war. So, production, there's a lot of workforce behind the wars. So, the car industry, is it Henry Ford? Anyway, that happened somewhere along this timeline, of course, and and that's automation. He revolutionized the manufacturing sort of process. So mass production caused massive growth in economies, in the global economy. All right, let's go back to crypto. Enough rambling on about the stock market and just the economy. So delete all these squiggles here. Turn the logarithmic view off. You can see how sharp that fall looks when you turn that off. It's insane. Go back to the monthly chart. Yeah, it has bled down a long way. I think, yes, we've punched through 20k support, but we're now back up on top of it. And what I think might happen is that we'll spend some time around 20. Like, it's probably, there might be dips down below it and through it and up it, but yeah, I think we might spend some time around this level. So further accumulation, and that's the beauty of a bear market, like I've said many times before, is that it takes a long time to sort of flatten out and plateau. So there's plenty of time to accumulate if that's what you're wanting to do. So yeah, that's what's happening there. Now, Solana, someone's asking about, Cilio's asking about Solana. Let's have a look at Solana. To go back to my other list here. We go back to the daily. So Solana dropping below 30 seemed to be the best sort of zone to buy in, because that's a big round number for Solana. I'm going to put that in as like a level. But yeah, that seems to be a nice area of support. There was a lot of price action around $30 through here, and then here and here as well. So if you were to turn on like a profile, you'd have a lot of noise going through there. There's not a hell of a lot here. There's a bit here, and then not much going through here. There's a lot here. There's a lot of action, price action through there. And then you move down, there's a bit here too. And then yeah, it's kind of what those profiles give you, is like levels of previous price action. Let's see if I've still got that tool in my indicators. I don't actually have a paid version of TradingView at the moment, so it might not let me turn it on, but have a look. Profile. I can't even remember what it's called. It's been a while since I've used it. Visible range volume profile, maybe. Yeah, it's telling me that I can't look at it. Anyway, you get the gist. DC Woodworking added to his bag today. Good to see you, DC. So yeah, some wicks down to the $20 level for Solana. Would have been nice, but I think Solana's going to be a strong performer in the next bull cycle. As these are the top 20 at the time that I made this list, and I dare say these probably are, a lot of these probably still are in the top 20. You know, you got Stellar, XRP, VeChain, Uniswap, I think that is, Tron, Theta, Sol, Matic, you can read them. Litecoin. So these ones should have some kind of a future in the next bull cycle, I would say. There might be a couple that get dropped out that, that don't make it to the next bull cycle, but for the most part, I recognize these from the previous cycle as well. Like, you've got Bitcoin, obviously, Ethereum, Litecoin. Matic was a 2018 crypto, I think. Came on the scene. Let me just check. Go back in time. Oh, 19, my bad. So yeah, about midway through 2019 is when Matic hit the scene. But if we go to the weekly chart, yeah, that's still got a ways to come down, but it might hold support at this area here. See how the price sort of stalled around in early 2021. There was like a lot of action through here. Perhaps that's where it's going to find support for Matic. And then, in the next bull cycle, pick back up again. But I'm going to measure the recovery if it was to recover back to all-time high. Yeah, about 680%. Okay, someone's mentioning quant. Let's have a look at quant. QNT. Where are my Qs at? Here we go. QNT. Go to the daily chart. It's already had a bit of a run here. 36% up. 36.6. If you were to grab it at that very low and sell it at the very high, that would have been almost 50% profit. Not bad. Long term, yeah. If you believe in it long term, then yeah, these are great prices. It hasn't really, at least as far as Binance is concerned, when it got listed, it hasn't been this low. Hasn't been that cheap. But yeah, if that's one you're interested in, go for it. Be cool. This is like the daily change. I might go and see if I go to coin market cap, it'd be cool to get like a year-to-date drop, or a drop from all-time high. Like how severe has it fallen from all-time high? Let me see. Customize price change. Yeah, year-to-date. Here we go. So we've got a year-to-date category. Let me move this along to just there. Okay. So since the 1st of January this year, you can arrange this by... So Phantom has dropped the most since the 1st of January. Harmony 1, second biggest drop since the start of the year. Gala, Phantom 1, CRV. Yeah, these are all huge drops. So if there's any of these that you believe in, these are really good buys. Sand, Avalanche, Axes. All fallen over 80%. Solana, beautiful. It's already fallen over 80% this year. Where's Bitcoin in this list? Ethereum has fallen 70. Quant is yeah, it's doing okay. It's fallen about 70. Doge, only 65.5% drop for Doge. It's holding up pretty well, Dogecoin, if you ask me. Bitcoin 57.28% drop since the start of the year. And then you start getting into coins that were already so low that they they didn't really move anywhere because they were already on the floor, or they're already, although maybe they appreciated value, but they've maintained that value. I'm going to arrange this the other way and see what has actually performed well since the 1st of January this year. Any that we recognize. Binance USD. The stable coins, yeah, of course. Yeah, just this one, this UNUS SED LEO. I don't know what that is. Who knows? Maybe it's a stable. Maybe not. The Leo. I don't know where this is even listed. Bitfinex and FTX, okay. Anyway. So, Bitcoin, what are you doing? What's happening today? So far, a 1.6% drop. We're still within the hour. Will we maintain the 20k psychological level? We got rejected by it just here. But yeah, that fall below 20 was so severe. It all happened within 5 minutes. Just huge sell-off. And then it proceeded with a really nasty downtrend. But hey, amazing buying opportunities through here. Like all this whole area, all this. I mean, there's probably going to be some more opportunity to come, I would say. I think there's a bit of a accumulation frenzy going on here, People got excited because the 20k wall, or the 20k support got broken, so that's caused this manic activity here. If I go back to a 15-minute chart, it almost looks like a bit of an Elliott wave. You got impulse move 1, move down 2, second wave up, which is impulse move 3, second correction, which is impulsive move 4, and then correction move wave 4, and then the fifth wave. So whether this counts as Elliott, I don't know. I'm not really an Elliott wave person, but a lot of people do go by it, swear by it. Yeah, it is nice to see some green candles, Big T. Let's go to the 4-hour chart. Yeah, I think just going by the trend and how things have been going, I'm pretty sure we're going to be hovering around 20. There's going to be dips below 20, and there's going to be little pushes above it too. Just a sec, be right back. Sorry about that. Just had to take a quick call. All right, so yeah, I just because we've sort of bounced for now, like we've found a bottom and we've bounced off that support. That does not mean necessarily that we're gonna start bull running. You know what I mean? So if today is another slump, that wouldn't surprise me. Like if we move back down below 20, that's quite natural, I think. So there should be some more opportunities to get into this range for accumulating. If you missed it, like if you missed these awesome levels come as it came down, then you might get that opportunity again as it moves down again. That's what I think is going to happen, but I could be wrong. It could hold 20 and you won't. You know, who knows? We'll just have to wait and see. But and that's the beauty of obviously dollar cost averaging is you've got measures in place in case it does. In case it does go back down, you've got room to buy it. Or time to buy it. Time and room. Space and time. Only reason we got the relief bounce was from Elon tweet, Doge moved first. Okay. I'll have to check that out. I haven't seen or haven't looked at Twitter in a little while. I'm going to check out Elon Musk's. It's funny how Elon Musk bought Twitter so that, you know, it prevents him from getting kicked off it. You can't kick the you can't kick out the boss, can you? Check it out. So Elon Musk, look at this tweet here. I will keep supporting Dogecoin. I think that's cool because he's getting in trouble at the moment for quote unquote manipulating Doge. Like, but I think it's a similar kind of thing to that that GME. You know, where the guy's like, I liked the stock. I like the stock. So he's kind of going down that route. He's saying, I just support Dogecoin. Like, what's the big deal? I'm not telling you to buy it. I'm just saying that I like it. Let's see. Is there anything that he said about Bitcoin directly? I think I'm in the right area. Tweets. USA birth rate. Oh, he's pinned that. I keep seeing that every time I've sort of come across his Twitter lately, but 300,000 likes for the Dogecoin tweet. That was 18 hours ago. Let's count back 18 hours. Let me open up the Doge chart and count back 18 hours. So 18 bars. Here we go. Ooh, look at that candle there. Right there, that big green candle was the result of that tweet, most likely. And what did that cause? Like a huge rally to go up 22%. Not too bad. Yeah, it's definitely an interesting story arc, this Elon Musk Doge relationship in the crypto space. I know that he's an advocate for Bitcoin as well, and crypto as a whole, so it's pretty interesting. It keeps it's fuel for a lot more interest in the space and people getting involved. So he's almost got 100 million followers. All right. I'm going to go down to the minute chart. Yeah, it's definitely, at least for the start of today's daily candle, we've got a big downtrend at the moment on the micro scale, on the minute chart. Get a bit of perspective with the 15-minute. But yeah, this is all very hard to sort of forecast, like where it's going to find support, how it's going to behave. You sort of just have to, you know, use your indicators. Like you can see there was some bullish divergence. This is the 15-minute chart, by the way. You've got a low here and a low here that corresponds to this low on the RSI and up to that low on the RSI. So that's divergent, bullish divergence. Lower lows on price, higher lows on RSI. So, you know, that's kind of like a little telltale that there is to be like some kind of a bounce or recovery off that, because you know the strength, the RSI has somewhat exhausted its selling for that moment in time, and there's, you know, a bit of a bounce or a relief is on the cards. It's not always the case, like it doesn't have to. Just because there's divergence doesn't mean it has to change direction, but it can be. What more often than not is it's a little bit of a signal. And then we've got bearish divergence. We've got a high here going up to this high here, and the bearish divergence is quite obvious there, you know. So we'll make that red. So that's bullish and bearish divergence. So this move down, who knows how low this drop's going to go. Like it might find support at 20 or higher. But yeah, these sort of like signals of divergence, they play out more often than not. Okay. I think I've been streaming now for an hour and 10 minutes. The streams have been roughly around that length lately, and not every day like I used to, but I've been trying to jump on as often as I can. So yeah, we'll see what happens. Like during the next major bull cycle, I'm sure we're going to see a lot more people filtering through and you know, checking out crypto-related content. I think this sell-off has probably sparked a lot more interest as well back into crypto. Like people just watching the the events unfold with sell-off. So yeah, I think as long as there's enough people out there like sort of suggesting, hey, we're in a bear market, prices are dropping significantly, this is when, you know, this is when you accumulate. You know, this is where you start buying, and then hopefully the retail part of the market gets a bit more sophisticated and knows what to do in what situation of the market, like what part of the market cycle. And then, you know, we're going to have a more sophisticated retail sector and not so, you know, blind and like inexperienced, you know, where, you know, they get involved at the top of the market and then they get wrecked and they sell at a loss and they lose all their money. And, you know, it's all child's play to the pros of the stock market that come in and get involved with crypto as well. They manipulate it and they know how to get the chart moving in such a way as to where it draws people in and gets them to lose their money. Anyway, I'm going to call it there, guys. Thanks for tuning in, and if anything crazy happens again, I'll be sure to do another stream and share my thoughts on it. But yeah, thanks again for tuning in, and all the best with your trading or accumulating. Bye for now.